Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong life for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well.
Good morning. Good morning. Hope you are doing well. Brad here with your Finance Fridays with Wealth Coffee Chats. Look, folks, it's been a crazy week for us here at Positive Money. We've got huge settlements coming in and our team have been busy. And a lot of times what we end up doing is having one-on-ones with clients, having these sessions about what is this, what is that. And sometimes we use these acumens that are just so over the top. People don't know, it goes over their heads. And this is what Wealth Coffee Chats on Finance Fridays is about. Unpacking the finance aspect. What do you need to know? What have you heard? What's the noise around the streets? What is it that you need to know about? And I want to unpack some things with you today. And we've touched on some of these things I'm going to go over today, but I want to do a little bit of a deep dive so that when you, as a property investor, are hearing these things, you know exactly what we're talking about. You understand the hurdles for us mortgage brokers, what we have to go through the banks, and then you'll be probably an astute mortgage broker yourself. Maybe one day we'll bring you on board. Who knows? Never know where the journey is going to go. But today, what I want to really talk about, and it's going to be interesting if you are an SME or even PRIG, like if you're employed by someone or you run your own business, what exactly are the banks looking at for your income? And I said this before, talked about a little bit briefly, but hold on. We're going to do a little bit of a deep dive on this. We're not going to just glaze over it and say this is what it is. We're going to dive in deep. And why this is important is because the banks look at things differently, and maybe your situation's a little bit more unique. Yeah. Maybe you're going through some structuring changes and you want to make sure that while you're going through this, if you're self-employed, run your own business, that you're ready for it. You know exactly what's going to be coming on the horizon while you're still trying to buy property. Yeah. Just want to quickly say hi to people that are jumping in. Good morning, Allison. Thank you for tuning in. Folks, you get in as much as you give out. So if you want to get more information, ask questions. Let's talk about things. Get involved. Put your information in. Talk to me. What's going on in your world? What do you need to know? But yeah, so let's unpack this. What are some income strategies you can use while you're going on this property investment journey? Or even just in general, when you're wanting to buy your next property, what do we need to do to help you get there? So let's focus on SMEs, small business owners, right? You own a business. Traditionally, you got to put in your last 2 years' tax returns, both your individual as well as your company. Banks are looking at what's going in and out of your business, so your turnover with your expenses and what your net profits are. And that's before tax, right? That's what goes in to the servicing calculators when the banks are looking at, okay, what do I need to do to actually improve my servicing is a question that you're probably asking then. So I want to minimize my taxes. Well, what other strategies can I do? Well, there's some ways that different banks look at it. And that's the next part of this segment that we'll touch into is what kind of banks are out there that actually might be more beneficial for these kind of situations. Because it's not your top four, folks. It is never usually your top four that we at Positive Money anyways put clients through. There's a few that we do use, and they're unique in their situations and they're unique in their space for a reason. But in general, there's so many different lending options out there. Plenty. And what do you need to do? What do you need to do when you are wanting to minimize your taxes, but also buy your next property? Good morning, Brandon. Appreciate you joining us today. So, what are the other avenues? So, one of the things that we can take a look at is, hey, are you paying yourself a wage? Are you paying yourself consistent wage or writing yourself a pay slip? So if you want to minimize your taxes in your business, are you paying yourself a wage? Because guess what, folks? Sometimes the banks will actually consider you as a POIG employee if you are paying yourself a fortnightly, monthly, weekly wage. The key thing here is, guys, it's not bulk, right? You don't want to just pay yourself in bulk and say, hey, yeah, I paid myself this for one time. No, that doesn't work, right? Also, what you don't want to do is then if you have a trust structure and then you're distributing all the different net profits from your one business to your trust entities, and then from there you're paying yourself POIG. No, that doesn't work either because you're taking away from your net profits. What we're wanting to do is tap into the expenses, folks, the expenses after your turnover, the expenses from where you're going to actually pull your income. Morning, Chris. Appreciate you jumping on. Thank you, sir. So what does that look like? So fortnightly, weekly, monthly, pay yourself a salary. Make sure it's going into an account because we've got banks that will go ahead and say, hey, look, yes, Brad, your client is self-employed, but what I can see is the business is running profitably. I can see he's done a little bit of tax minimization, good on his accountant, but I can see that he's consistently putting himself in a wage. Yeah. And then that's how we treat some clients who are trying to minimize their tax as POIG, which is perfect. Next, what is another alternative besides just paying yourself a wage? Well, there might be some distributions that you pay yourself, but maybe the structure is a little bit off. But you own a business, and we only want to look at maybe your notice of assessment. So you guys might be aware, maybe not, that when you lodge your tax returns, the ATO goes in, does a little bit of review, somewhat, and then they issue out a notice of assessment and says, okay, your taxable income is X, which is great, right? We've got some lenders that will only look at your notice of assessment when they're looking at income. So how that works for you as a business owner, speak with your tax accountant. Here at Positive Money, we're not tax accountants. We do have some connections like Positive Tax. If you're wanting to have a little bit of support there, let me know. Definitely get you in touch with someone that actually knows how to do some proper structures. But have a chat with your accountant. See actually how that's going to work for you. So from a lending aspect, we've got some alternatives, right? So from a fully verified loan, which is that traditional 2-year tax returns, both for your individual and for your company, we've got some alternatives if we're wanting to try to reduce our tax liabilities. It's POIG, paying yourself a consistent salary, or your notice of assessment. That's a great opportunity for you guys to still have your cake and eat it too. Yeah. Okay, but what if that's not an option either? You've heard me talk about this before, and I'll reiterate it because it's an important thing to listen to, guys. What if the fully verified route doesn't work for you? Maybe there has been a change in your business structure that's fairly recent, and it's going to impact your actual growth. Yeah, it's going to impact your actual growth. And what we got to think about here is, okay, well, what do I got to do? My tax returns are not up to date. It's not a true reflection of what's going on in my business today. Maybe I've brought on a new contractor that's giving us, or a new vendor that's bringing me a new business, whatever it might look like for you and your business. But what do you have to do? And this is where alternative documented loans come in. traditionally called low doc. There used to be no doc back in the day, and I remember this. And this is when I worked in Las Vegas. So originally, that's where I'm from, folks. Viva Las Vegas. And I was working in collections, mortgage collections, doing loan modifications, foreclosures, and short sales for homeowners. And this was during the global financial crisis. And my credit union, to its benefit, like, it had good clients. It had clients that were fairly stable, but there were certain instances where there might have been some no docs in there, not necessarily from us as a business, but some from contractors and things like that. I won't get into much of the details, but they existed. This is not this. This is something completely different. Alternative documented loans are very verifiable, and there's 3 ways to verify it. As a whole, we're going to first take a look at seeing, okay, well, Mr. Client, Alex Suarez, I apologize if I'm getting your name wrong. Chris, Brandon, Allison, those who are in there. I'm going to ask you, well, what do you declare your income to be? It's a piece of paper, right? Be honest. We're going to have to verify it, right? So there's 3 ways to verify that type of income. One, the least favorite of every credit officer I've ever met is the bank statements. So your business bank statements. And what they traditionally do is look at the credits in and the debits out, and whatever's left over, that's what you can use. And that's over 6 to 12-month basis. It's not very pleasant because, as any business owner probably is aware, there's money coming in, there's money coming out, and it's going from this account to that account to this account. So that's one verification. What about verification number 2? And then this one's one I personally like more than the other 3. And the reason for it, folks, is it's what's reported to the ATO. But every bank looks at these differently. And it's your BAS statements, your quarterly BAS statements. Your BAS statements can either be lodged monthly or quarterly. And what banks can tend to look at is, okay, let's take a look at the sales and then just do a percentage. That used to be the tradition rolled out. And I was speaking with the lender the other day, and interesting enough, they're going back to the basics. They're finding some of these very convoluted verification methods for these things are probably a bit too complex, and it doesn't really put the client in the best position, nor them as a bank. Anyways, they usually do a percentage, but they used to do a percentage, and that's coming back. And then the next part is they do a convoluted calculation in the background, looking at what's on line 1B, W1 on your BAS statements, and then come up with this very complex calculation. But that one's pretty interesting because what we can do is take your most 2 recent BAS statements, your most 2 quarter BAS statements, and then annualize it for a year. And that's the income that we can use. Yeah. And then the last one, which it's a benefit, but I know some accountants are shying more and more away from it, is an accountant's letter. Now, every bank has a different accountant letter that, well, obviously those who do low doc, and some are a little bit easier to deal with than others. And one of the ones that I deal with the most is a little bit more of a, let's put it on the accountant to come up with why they support your income, to give you some guidelines. And what you do, Brandon, I'm not going to say what you just said there. Appreciate you, and you probably can. Not gonna repeat that. But yeah, accountant's letter. What it does is it gives the accountant the ability to say, okay, look, I've looked over your taxes over the last 2 years. You are known to me. Your finances are known to me. And from where your business is heading, where it's at and where it's heading, I can see for sure that, yes, you could afford this. Now, a lot of accountants, like I said, are shying away from this verification method because it can be a bit more earnest on their licensing, which I get. But a good accountant realizes where the benefit is for their client anyways. And when we are looking at low doc options, my conversations with my client is, let me get on the phone with your accountant first and find out what's going on in your business, because more than I am, and sometimes the client as well, the accountant knows exactly where you're heading and where you're at and what you can and can't afford from a liabilities perspective. A good accountant, anyways. Not all are the same. Not all brokers are the same. Not all accountants are the same. So, but what I'm saying is, I'll have that conversation with the accountant and find out, okay, what can they do? Is this something that they can afford? And if someone was like, yeah, but I'm not comfortable with doing this, then we'll use what Brandon says. We'll go and look at the BAS statements and take a look at what that shows and analyze that over a 12-month period just to make sure that it's showing that. And that's the income verification process for SMEs. And now there's some verification processes for PAYG, but there are those who are employed. But it's really stock standard for those ones, right? We take a look at the pay slips. We take a look at your what's going into your bank. If you've got overtime, commissions, bonuses, what does that look like consistently over a 12-month period, 2-year period? There are some lenders out there that are a little bit more niche. And this kind of leads me into the next thing I want to talk about that kind of corresponds with the income verification is, well, where's the variety and the difference in the banks? So we've got these deposit taking institutions that traditionally they get their lending from the deposits they are getting from their clients. So customers come in, they put your money in your savings account, and then the bank leverages that to help lend and promote and structure their bank so that they can take out and provide lending. Very simplified terms, guys. I'm not going to go too deep into that because it'll just go over most people's head. But in all fairness, traditional banking, right? And with that, that means that they are going to be very risk adverse, right? They're not going to be that commercially minded type of lender where, oh, it makes sense on paper or conversationally, but on paper, when we look at the taxes, here's this risk, this risk, this risk. You need to fit in this box so that I can lend to you. And that's where the trouble becomes, right? And what we have to do as mortgage brokers is take a look at our clients and find out, well, will they fit with a deposit taking institution, your traditional banking? And this is why a lot of times clients go to their bank and they say, oh yeah, I can do it. But then they end up not being able to prove. And this is why I always say, get a good mortgage broker because they actually can navigate this crazy finance market for you. So ADIs, deposit taking institutions. And then we've got your online lenders where they don't have a branch presence. Still probably backed by an ADI or a deposit taking institution. They got their lending from them or are backed from them. But they're a little bit more nimble. And the reason for that is the risk profile is a little bit different for them. They take a look at things that your banks don't need to or are afraid to look at. And they'll be a little bit more niche. I've got one lender in mind that's connected with NAB. I won't say who they are. And phenomenal. What they do is they take a look at your bank statements and you don't really need to provide us your pay slips because what we're going to do is we're going to tap into your bank statements and we're going to take a look at where your credits are and then just work out your income from there. That's crazy. But I think that's, to be honest, that's where a lot of these banks are going. I'm not sure if you've heard in the news recently, Macquarie's going cashless, Macquarie Bank. They are no longer teaming up with different ATMs and they are going cashless. And part of my Christian background is like, oh, the end is coming. We're going cashless. But this is the way of the future. You're going to see more branches probably closed down or there'll be more hubs and banks moving closer to that online presence only. But it's a unique niche for online banking and it's a niche for clients. It helps. And while we're going through these things, I just want to ask you guys, what are your thoughts about some of this stuff? I know it can be a little bit complex, but it's interesting. I find it fascinating. Anyways, and then from the online banking and then your second tier lenders, as I call them, where they may be deposit institutions, but they're not in the top 4, top 5 lending banks, but they need to be competitive. So they go ahead and give little policy niches like just looking at the notice of assessment or treating self-employed individuals as PAYG or as employed. We get those policy niches. Then we have your extreme non-conforming where they are taking a look at you as a whole And I love this. I love this perspective. I love when banks are doing this. They look at you as a whole and say, okay, look, I can see that this individual has the income, but on paper, it's a little bit convoluted. So I'm not going to necessarily make you jump through hurdles. Gosh, look at my English today. Take it away. We're going to see what you can actually fit into. And that's beautiful. And those are the ones that will do the alternative document loans, where they'll say, okay, let's take a look at your BAS statements, your bank statements, and reaching out to your accountant. And this is fun, right? This is where my little zone of genius is where I find this fascinating, is like, okay, if I can fit a client with them and that's going to give them a better result, I'm going to do that. And from there, we have your ultra non-conforming lenders, and that's where we tap into more of an asset structured lend. Not necessarily call it fully asset lending, but we're taking a look at, okay, private lending. Private lending looks at you from an equity position. And this is more of your short-term lendings. These are your solution-oriented lenders where, okay, I can see the value you've got. I see you need to do this, this, and this. So let's give you the opportunity. Let's give you the opportunity. If you're an SME, this is a lot easier, right? Because they do require some kind of ABN registered business to actually be able to do this structure. This is something that us as brokers can help you out and understand as well. Not all brokers understand private lending, but that's where I come from. That's my background, is the non-conforming and private lending space. And what they'll do is they'll give you the short-term option so that you can get this solution that you're looking for and then take you to that next step. So that means getting you in, having you find an actual opportunity that you're actually matched up with, give you that short-term lending anywhere between a month, usually at max about 12 months. And then from there, we move you over to that non-conforming, that second-tier lending. Yeah. And this is what it's about, guys. Understanding the acumen, understanding what options are available, what kind of verification processes the banks look at for your income, how you as SMEs can tap into different options and still get that solution that you're looking for, having your cake and eat it too, as I call it. Can't always, but as long as you're informed and you know what you need to do, what you need to achieve, having the right strategies in place, having the right accountant in place, having the right mortgage broker in place can help you. That's my rant. That's my spiel for the day. And folks, I love talking about finance. And what I want to know from you folks is, what do you want to know? What do you want to know from me? Is there anything out there that you need to know that I can actually help you out with? And send me an email. You see that on the screen on the bottom, finance@positivemoney.com.au. Shoot me some questions that you have heard us talk about or you wanting to explore. And if I don't know, I'll bring someone on to the podcast and talk about it. Or if you just want to meet with me, you want to have a chat about your unique situation, here's my QR code. I always get messed up over there. Tap on that and let's have a chat. Let's talk about your unique situation. And then from there, guys, as always, hope you have a wonderful day. Reach out. Let's chat. And if you like what we're talking about, subscribe, tell your friends, tell your family. We don't just talk about investment lending options. In the next couple of weeks, I'm going to be talking about all the different first home buyer grants and what options are available out there for those who are wanting to get into the market. Even maybe some that are looking for 100% financing. Those are the days, right? But maybe that's coming back. We don't know. Well, pop us a chat, pop us a like, and see you next week. Thank you, guys. Have a good one.
Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.